Good evening and welcome to the usual video we release every Sunday, in which we either look at 1 to 2 stocks or 1 to 2 indexes. Now today I'll be looking at 3 sectoral indexes for only one reason. The first one has been in the news the whole weekend after Sitamaram announced that she's going to reduce the taxes on the fuel by a small margin. It's not a huge amount as people are drumming up. Everyone now wants to look at the auto sector, so I've taken a look at the auto sector, FMCG sector and the pharma sector. I've chosen these 3 sectors that they're at a turning point at which they can either give us a good up move or we can fall flat on our face. Now the chart the bigger chart is the daily chart, after which on the left side is 4 hour, then middle down weekly, and right side on the bottom is the monthly chart. Now the first chart which you're looking at is the Nifty FMCG, and I must say that the chart is looking very similar to ITC when we look at it in terms of price action, not in terms of the candle pattern and everything. My article tomorrow is on ITC, and why I say that is basically if you open the ITC chart, you will see that it has a small range in which it can rise, and then it's meeting a important resistance zone, which I'll cover in the article tomorrow. So now this is a similar problem which the Nifty FMCG is facing, and when we look at it, number one, there's a quant resistance at 38,220, then 39,220 and 40,000. However, the 38,220 quant resistance zone and 39,220 can also be taken as a candle resistance zone, as we can see that it has tested this zone on 19th April, then again on 29th April, then again on 5th May, and it has always failed to climb above this time. Then even before it basically tested it in 26th October last year, then it kept on testing it throughout November, at which it failed and came down straight away. Then it has risen and has naturally met the same resistance again. So now this is going to be a very important zone for the index to cross. If it manages to cross this zone, then it will rise up to 40,000. However, if it gets rejected within this zone of 38,220 and 39,220, then we can expect a pullback up to 37,800. If it breaks 37,800, then a fall to 37,250 rupees. So this is a very important zone, and I, on a personal basis, will not want to put any FMCG trade until it crosses this, as according to me, when we look at the global cues, I'm not talking about what is happening in the Indian market. For 1-2 days, people will be excited with the fuel cut and everything, but then we're going to have to get back to the global reality. And according to me, a lot of people are going to get trapped here when it's trying to make a breakthrough. Because even if you were to go long here, the margin of profit you're going to make when you go to the stock side is not a lot. So I would avoid a trade as of now in the large FMCG names that are largely constituting this move. Now the next sector we're looking at is the Nifty Pharma. The Nifty Pharma it's called basically I've given only 2 quant resistance levels here because that's the major hurdle for it, and it will be, and when we look at all the time frames, it is the major hurdle the index is facing. You can see the index made a bottom here, then again the same bottom saved the index from having a decline. However, the index on Friday had a good up move, and it managed to come and again test its 20-day moving average on the daily chart. Now, due to the amount of positivity people are having owing to the fuel cut and everything, there is a high probability we'll break this, and also if you look at the candle, it's quite evident we'll break this and we will rise to 13,280 to 13,352. Now that is one resistance zone at which the index will really get tested for only one reason. We see there's also the 50-day moving average on the daily chart, and then when we come on the 4-hour chart, there's the 200-day moving average there. When you drop to the weekly chart, there's a 20-day moving average acting as resistance, and the 20-day moving average on the weekly chart will be a nightmare for the index. So as of now, I expect any up move to be killed between 13,352 and 13,352 and 13,280. This zone will be a killer zone for the Pharma. However, if it manages to breach through, then the target is the 200-day moving average at 30,700. If it gets rejected here, then we'll be heading back to the support, first of the 20-day moving average and then 12,670. If we break 12,670, then 12,350. However, I expect it to continue trading within this range for the foreseeable future. I would say the next at least 1 to 2 weeks, it will hover around with this resistance and this support, dilly-dallying within here. Now the last one which you're looking at is the Nifty Auto, the one everyone is excited about. The fuel cut has happened. Great. Now Nifty Auto, the one stock which I've been tracking because it is a holding in one of the accounts I manage, is Hero MotoCorp. Hero MotoCorp, I did not buy in my own account, as that time there were no funds to put into the stock. But when it had completely collapsed, I bought it in one of the accounts I manage, and it has had a very good rise after that, up till now. So now the Nifty Auto is at a crucial point, and due to the excitement, there's a high probability, yes, we will rise to the resistance level at 11,130, which is going to be the first zone that is going to test the index. If we manage to break 11,130, then the next target is 11,420. The 10,760 support is going to play a very important role if it faces any slowdown around 11,130. Because if you look at the Friday's close, 1 second, Friday's close was 10,914. So basically it's got a range of about, you can say 2% up till 11,130. So if it's able to reach there, then it will have a bit of a slowdown there, as that is a very important zone for it. So we'll have to see at 11,130 whether it gets rejected or whether it blows through. If it blows through, then 11,420 is the next resistance zone. If it gets rejected 11,130, then 10,760 gets activated as a support. So that is all for these three indexes. Once they reach the levels which I have shared in the video, I will provide an update for them either on Telegram or on Twitter. And if you do like the video, then click the like button below, and also subscribe to the channel and click the notification bell before you close the video. Thank you.